Hello, good evening, guys. Happy Valentine to you. So, it is a giveaway day, and I want to answer the questions which I have put into the group for you guys to answer. So, from my answers, you will already know who wins and who do not. So, I will show the questions now, then I will answer them the way I will expect it to answer it. Your answers may be a bit different to mine, but then that is no problem at all. Similar answers are still okay, because we may not have the same. You understand what I'm trying to say? Okay, so after I have given my own answers, then I will cross-check everyone's answers. Everyone who has sent me a PM with their answers, I will check them, then see who got it right and who did not. Then we will know who has won $200 and who is yet to. So the questions which I've asked, the first one is, I spotted a good trade I want to take. I've spotted a good trade I want to take, and my risk is $1,105.3. My stop loss is placed 3.2% away from my entry price line with a leverage of 32s. What is my position size and what is my initial margin? If you have been following me, you will notice that these questions I have discussed everything in my YouTube videos. Everything that are in these questions, from questions 1 to 5, I have discussed them. So let's see about the first one. So the first question is that we have 1,105.3, which I am risking, right? And then leverage is 32s, and distance to stop is 3.2% away. 3.2% away, which this should be the same as 0.002, if I'm not wrong. 3.2 divided by 100. Okay, 0.032. Sorry about that. So that is the same thing as 3.2% away, right? So how do we calculate position sizing? You all know to calculate your position size is to divide your risk by the distance to stop. Now, which is 1105.3 divided by 0.032. So my position size will give me what? Here we are 1105.3 divided by 0.032. So position size is 34,540.625. Sometimes the point something will be irrelevant, depending if you are allowed to put decimals above. The sum will just be one decimal, but this is the main figure I want to see. 34,540. That is the position size. Now, I've always said that leverage does not matter. Leverage most times is to show you what your margin is. And how do you calculate your margin when you have a position size? Is simply divide the position size by the leverage. Now, due to some maintenance margin and other fees and other maintenance things that exchanges put in place, the margin may not be exactly the same, but it will be very similar. But the simplest way to calculate it is dividing your position size by your leverage. And here we have our position size, and our leverage is 32s, so divided by 32. So our margin is, our initial margin will be $1,079.39. So this is our position size, and the other one is our margin. So this is for question 1. That is for question 1. It's as simple as that. Then the second question is, I am in a short position and already in profits. I am looking to move my stop loss to an invalidation price level on the below structure, while hoping to ride the winner. Okay, so simply this is a winner already because I am in profit. So I am wanting to ride the winner and not get taken out easily. So I want to push my stop loss from a level around there into an invalidation level. Now, where is our invalidation level at on this particular structure. Like I said in my previous video, that we have this is a market structure, okay? So we have something like this. We have this coming from this high to this low, making a lower high, making a new lower low, another lower high, and a new lower low. Now, this is completely a downtrend. Where is our invalidation level? Our invalidation level is a level of price or price line where once price value goes above it, then the trend is definitely reversing. Now, we have this lower high as well, and price is currently here. So where is the invalidation level? Some people may say above here is in the invalidation level, but is it really the invalidation level? If you watch my invalidation level video, you will notice that I said a low or an high pushing to a new lows is the invalidation level. Why? Because you have this swing from this particular lower high coming down to make a lower low, and it has retraced hopefully 50% of this swing. That's fine. Then it's coming down. You do not know the direction at which price is going. If it's going to create a new lower lows, you expect it to create a new lower lows, yes. But then price can do something like this. As it comes above here, goes down a bit, only to come up here, which means it will take out whatever stop you have here, but then the price will see then continue downward to make a new lows to this. But it won't go above this because this is the last high making a lower low. So what will have there, or what will happen, or what happened on this move? This just means on this particular swing from this highs to this low, it made an ABC retracement, and this is A, B, C, in as much as it didn't take out these highs. So this is the invalidation level here. This is the invalidation level, not this. If you place your stop above here, you can easily be taken out because you don't know if price will count the ABC retracement and it won't take out this low. But the moment it take out this low, this highs, then the market is definitely reversing. This side didn't lead to a new lows, so it could probably just come above here and come down. But if price were to come from here and break this highs, then the market is also reversing because this high led to this new lows. I hope you understand. So here, this point here is the invalidation level where we want to place my stop and expect price to make a new lows. So let's go to question 3. Okay, I said I opened my charts and in hope of finding a trade in either direction, either long or short. I noticed that the volume were decreasing as the price decreases. What should be my first assertion as a result of this? So if we look at this particular drawing, let me make it big. So if you look at this particular drawing, you can see that prices were coming down really, but look at the volume of drop. The price was coming down here, volume was rising because of this, so it rose. That means there was huge sell-off coming to the market supported by volume. But from here, from this point, the way the market was decreasing, the volume were quite low compared to this, which means the volume is decreasing and the price is decreasing. The price decreasing is not the issue. The issue is the volume is decreasing. Now, this is an anomaly, which this then suggests that price is the dumping, the momentum of drop on this price is weakening, is panning out, is reducing. Sellers are losing steam. So what will you expect in a situation like this? You expect the market to reach a point of support and then be taken over by bulls. But if the volume here were to be rising almost as equal as this or in bigger than this, then you will still see that the volume of sales is still strong. So bulls won't even go near there until the sellers are exhausted. So volume decreasing while price decreasing is showing that bears or sellers are weakening. They are losing momentum. They are losing their steam. So what do you want to look for in this scenario? So my first assertion will be that the price is weakening, so I will be looking for a long rather than looking for a short. I hope that answers that. So anything related to short or to long, looking for long support demand on this is okay. So let's take the fourth question. Okay, so in a promising setup, in a promising trade setup as this, everyone is optimistic about a long with liquidity resting below the lows. If smart money wants to buy as well, what action will they first take? Now look at this. Here we have what we call the double bottom, right? The moment price came here from this to this low, like this, we have the double bottom or what they call the W pattern. That is the double bottom. Then on this third one, people will call it the triple bottom. I've been saying that most times now. So what we have now is liquidity resting at all these points here. We have liquidity resting here. So if smart money wants to buy, because they see now everybody is going long, what do you think they will do first? And price is currently here. Remember, smart money don't want to buy at premiums. They don't want to buy at premiums. They want to buy at a price which is quite low. So what they are going to do is shake out all the people who have bought at this point, and also bought at this point because they expect price to go due to their W pattern or double bottom or triple bottom. So all of them have their stops, which is liquidity, resting below this low. So smart money we manipulate by selling some bits to make sure that these lows get triggered. Now, assuming we have history of price, we might have a demand or something here. But here now we definitely have support. So they will stop on all these people who have their stop loss here. And when they trigger these stops, what is that action they are doing? They are creating a sell order. All the people who have bought 1, 2, 3 here, they will be selling because when you buy, the next action is to sell. But here you are selling in stop loss, and smart money will trigger all the people's stops. When their stops are triggered, which means they are selling whatever they have bought in loss, smart money will then be accumulating all the buys. Smart money will be buying below here, and once they are done buying, they push price back above here. Now look at invalidation level again. This is the level that has pushed the price to make a lower low, right? Let me clear this. This is the level that has manipulated the price to come down and trigger all these lows so people can sell while they buy from all the sales action. Now, this is a high leading to a lower low. They will then manipulate the price to come back above this size. Once they come back above this size, what do you think will happen? Breakout traders will place their entry above here, and those actions will then even push price up even further. Retracement traders, for this to be broken, will then hope for price to come back, and then there will even be an higher buy order here. Then once that fails, it pushes price back up. Why smart money have bought all below these lows? That is how we have stop ons in the market. So here also we can say price manipulation, but I expect you to be specific about the action they are going to do, which means they are going to take either a short position to make sure price trigger the lows and then push price back up. So we will see if anybody answers that correctly. It is clear price manipulation. The CBN recently created an FUD in the market, which resulted into people selling. We do not know if they are accumulating or not. Who knows? That is also price manipulation. You can use the news and you can use purely technical patterns to manipulate price. So let's see if anybody answers that correctly. So the question 5. I am in a short trade and in profit. I notice that the prices are approaching a daily support level, and that support has a tendency of holding and supporting price rally. Nonetheless, I refuse to close my short trade, but rather open a new long position alongside my short position once price gets to the support level. What action have I performed? That's quite simple. When you have a short position from here and you are in profit coming down, And here is a support, either daily or 4 hour or any other time frame. You do not know if this will hold price. So price can do something like this and then come back to the upside. Likewise, price can also just go through it and keep going down. So you want to write this trade, but you do not know if this will create a speed bumps in the way, or it will cause your tire to remove if you are driving a car, or it can cause a full reversal. So you are not sure of that. So you do not want to lose money while anticipating a longer, or while anticipating this demand will hold or break. So what do? You go long here as well, with maybe the same margin, the same risk. So if this at the end of the day comes to play, you will have your stop above here, which is the invalidation level for going below this low. Then once it's triggered, whatever R you might have taken from this trade, if it's 3R, then you will have a profit of either 2 or 3R2 on this particular trade. So you end up losing nothing. And so when your short trade is closed in stop profit, your long here will be accumulating funds even higher. The more it goes up, the more it accumulates funds. But then if this support breaks, which means you have your stop loss below your entry, and it does something like this, you will get filled here, then you will get taken out here, 1R, right? But from here, whatever, if you have 2R or you have 4R at this point on your short trade, when price gets here and takes out your stop loss on the long, you have 4R. So the R you have lost to this long, you have accumulated it back in profit here, so you have lost nothing. And once price continues to go down, you continue to be in profit. So what action have you performed there is an edge trade. You have edged your position. That is edging. So that is it. Let me now see what the people who have sent me the answers have done, and then we analyze together who is correct and who is not correct. So here is a group where we gave the questions. We have some guidelines and then the questions rolled. So people have answered these questions. They have also sent me their answers in PM for privacy. So let us see who and who has won this. So from the messages I've received, okay, Dr. Dewumi as the first person on the list here. So, okay. So number 3, my assertions will be that BS sellers are wearing out and the market will soon reverse. Let's check that. Okay, what should be the assertions here? Okay, yes, that is correct. Like I said, price is definitely weakening. Sellers are weakening. So what you want to look for is long positions. So your assertion is that sellers are wearing out. So that is correct. So that's in number 3. He's gotten it right. So that's 1 point, right? Then number 5, edge your position. Yeah, that's correct. Number 5, edge mode. Number 5 is also correct. Then here it says question for number 2. Okay. This number 2 is wrong. This is not the high leading to the last low. This is the high leading to the last low. If you have your stop loss above here, it's too far away. So if market comes down, you will be in very little profit, like more or less 1R. But here you may be more or less 2 or 3R. So this is the invalidation level where you want to place your stop loss. So for this, he is wrong on number 2. So number 2, he has 0 points there. So we still have number 1 and 4 to go. Number 4, they will take a short position till the price gets back to the demand and then buy. What is the question on number 4 again? Okay, smart money. Yeah, that is right. I want to take a short position. That is correct. So number 4, he has 1 point there. So number what is left? Number 1, initial margin. Wow, this is wrong. This is wow. How many billions is this, doctor? This is wrong. This is wrong. Initial margin. No, 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 no. This is wrong. So number 1 is wrong. Number 1, you have 0 points. So let's look at the other. Let's look at the other. We have Dr. Famo. Dr. Famo. Okay. So it's a question 4. The action of smart traders we first take is to create liquidity below the buy price where sellers place their stops. I maybe meant to say buyers here, where buyers place their stop. Smart money will need a lot of sell order for the order to be filled. Yes. So when the trigger stops and support broken, it will force other sellers to sell into the order. Okay, that is correct. You must have made a typo there. Yes, they were seeking for liquidity. That's correct. They seek liquidity and they take a short position to grab that liquidity. They take the short position just enough to push price to break these lows. So this is where they fill their large orders. Okay, that is where you are smacked. Okay. So number 4, let's give him 1 point. Then we show that one. Number 3, my first assertion will be the strength of the BS in continuation to pushing price down is now weakening, and there may be possible price bounce to the upside. That's correct. Price is weakening, right? Okay, price is weakening. So number 3 is also correct. Then number 5, that's edging, is correct. Then what number again? This is number 4. He has answered 4, 3, 5. This is number 1, right? God help me. Okay. Number 1, God help me. So what number is the remaining? Number 2. Okay, this is number 2. Sorry, first one mistake. Use this for number 2. Black line as invalidation lines. Okay. This position size is not even correct. Black line. Where is the black line? Are you saying that this shade is the black line? Is that the invalidation level? If that's the invalidation level, that's incorrect. That's incorrect. That is where you have your initial stop when you are about to fill your short order. That is not the invalidation level on this price structure. So that is incorrect. Then, who do we have here? People are messaging, I think. Done, doctor. Okay, we have Zax. We have Zax. Another doctor. Okay. Here we have number 1 there. He said risk. Okay. Stop loss. Okay. 3, 4, 5, 40, 6, 2, 5. That's correct. 1, 7. That's perfect. 3, 4, 5, 40, right? 6 to 5. Oh, that's perfect. So 1 point there. Then number 2. Or let's say showing workings, a FICO. Okay, question 2. Pam, pam, pam. 1, 2, 3, 4, 5. Okay. Look of this. This, I can't clearly see this, but then points of invalidation. Yeah, okay. A break of previous structure, lower high to the upside. Okay. Let me see the image here. That is question 2. 1, 2, 3. Okay, are you talking about this side? 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Okay, that's correct if that's it. Yeah, that's correct. So number 2 is correct, 1 point. Then number 3. Number 3. The beer sellers are getting tired. The selling pressure is waning and the bulls will soon take over. Selling pressure is absorbed gradually by the demand zone. I will be looking for entries for a long trade. That is question 3. Let me see question 3 here. Oh, that's correct. You are looking for a long trade. That's perfect. So number 4. What is the question on number 4? Okay, smart money. Smart money will spoof prices to the lows. They will make a sharp manipulation of prices into the demand zone, something like this. Okay, that's perfect. Then they move price back up. That's perfect. That's correct. Manipulation have to sweep out lows and take out stops. Perfect. That's correct. So that's also another point. Wow. Then question 5. You are performing an aging action to guard against counter moves, profiting from both trade movements, maximizing profits and minimizing losses. Wow, that's perfect. Wow, we have a leader already. So who else? Alex. So we have Alex. This is number, okay, number 2 first. Number 2, no, this is wrong. This is not your, this is not the, this is not the invalidation level. Market can do an ABC movement like this. Market can do an ABC movement like this from me, from this point. A, B, C. And it won't trigger this size. So then from here to start going back down. So this is invalidation level, not there. So that is wrong. So that number 2 is 0 points. Then the next one, number 3, price manipulation. No, that's not price manipulation. It is price action, not price manipulation. The volume is quietly showing us that momentum of sellers is weak. They are becoming weak. Price is just like going down on its own without the back without the support of volume. You know, volume is what shows the amount of supply or demand coming into the market. So it's like you putting little effort into something and you are seeing great results. Like assuming you have a glass wall or a glass window, you just touch it with the tip of your finger and then the window shatters. It breaks, yama yama, it breaks. Like you have used an hammer to hit it and you just touched it with your tip of your finger. So you see, there is an anomaly. I don't know if that anomaly is what you mean by price manipulation here. Yes, there is an anomaly, but I don't know if that is what you mean by manipulation. But I won't see this as manipulation. I will see this as the volume is telling me this move is weak and there is something wrong. I don't know if that is what you mean by price manipulation. But as for price manipulation, it's wrong. So let me give you a 0 for that for now. So, but if you can explain to me further, then I might change this. I don't know. So the next one is question 4. Wait for price to come back to support. Smart money won't trade on support. You have to know that. Smart money won't trade on support. They will break the support so that these buys here, their stops will be triggered. That stop is what they are interested in because those are liquidity. So the stop is what they want to trigger. They won't wait for it to come to support and then buy. We how do we call ourselves? We retail traders are the one who will wait on support. Then once price comes back to support, we will buy. But smart money, they will break that support and you will see something like an aunt, like a market aunt. Let me see if I can get an example of that here. Like if you have support, where can we find support here? Okay, assuming here now. Okay, see, assuming here now we have this size, this size. That could be resistance, right? But then we have this coming just above it to trigger above this size, these two eyes. Then what happened? Price closed back below it and came down. So that is example of what smart money will do. They will trigger the stops which is above this eyes. They won't wait for it to come there to buy. They are not retail traders. They move the market. So what they do is what we'll see. So here I won't say they wait for price, but as you have said, they definitely you didn't say buyer, so they have to wait. But then they create what happens. I don't know if to give you a zero or to give you an half mark here. I don't know if to give you an half mark here. Okay, let me just give you 0.5 here. So the next one is 5. 5 is correct. 5 is correct. That's one full point. And then left with 1. Okay, now this. I shouldn't have said what I said there anyway. I said check it properly. But I believe because of this first 3 numbers, and which is 3, 4, 5, 40. So I believe we must have made a mistake here with the typo. So that was why I said you should check it properly. But then the position size is correct, but the initial margin is wrong. This initial margin might probably be right. Maybe if you have used 100 days, right? Let's see if you have used 100 days. If you have used 100 days with 34,540.625 divided by 100. Even with 100 days itself is still wrong. So this is right, this is wrong. So that is half mark as well. So that is number 1. 0.5. Then who is the next person? Great man. Okay. Answer to question 1. Okay, that is correct. This is wrong. Why are people getting this wrong? These things are very simple. This is so great man. You have half mark on that question 1. You got the position size correct, but then you missed the margin. The margin is not correct. Then question 3 here. First assertion should be that the bears are losing the strength to drive the market downwards and there might be a bullish reversal. That's correct. That's number 3. Number 3 is correct. 1 point. Then number 4. The action will be to take first. The action they will take first is to wait to see if there will be breakout to the upside or downside. Question 4. Smart money. Smart money don't trade breakouts. They move the market. What the actions they take are what we see on the charts and what we use to predict what the next movement might be. So they wouldn't wait for a breakout of this side before they long, or they wouldn't want to see if this price will come down. They definitely want to drive the market down if they want to long. If they want to short, yeah, then they want to drive the price up from this very moment. Once they drive the price up, then they will trigger the stop above this, which will trigger a buy sell or a stop buy. Then once people are buying back the market from their shorts or this place and this place, they will be selling. So I don't know. This is wrong. Question 4 is wrong. They won't wait. Smart money won't wait. They will do what they want to do. So number 4 is wrong. That's 0 point. So number 5, known as edging. Okay, number 5 is correct. Left with 1 more. We have number 1, 3. Okay, we left with number 2. Okay, number 2 is correct. That is the invalidation point. Number 2 is correct. So who else again have sent me? Okay, Lee Satoshi. Satoshi Nakatomo. Our one and only Satoshi Nakatomo Jr. Okay. Okay, question 1. Position size is 30. I don't understand. Do you mean 35,000 or? That's wrong. 35 points. That's wrong. Then 30. That's wrong. Number 1 is wrong. Then number 2. That is a violation. That's correct. That's correct. Then number 3, I think. Then number 3. Okay. Sellers are closing their shops to lock in profits. Yes, this can also be as a result of sellers taking profit, but then I would have expected you to say sellers are weakening. So either due to profit taking, that could be a clause, yes, but then buying. Okay, for sellers to be taking in profit, that means they believe the price can no longer go down as well. Okay, that's also correct. Because if sellers think the price will still go down, they wouldn't take profit at that particular point. So for them to be taking profits means they believe the market is weak, and then there is likelihood of a reversal. Okay, I'll give you one for that. So number 4. Since everyone is optimistically long, there will be a huge volume of open long orders. But since liquidity is low, smart money will create selling pressure to that price that is. That's correct. So that's a 1. So number 5, you fed your position. So if price gets to the daily support and reacts bullishly to the support, you can close your already in profit yours and ride your new long. That's correct. But if price gets to support and doesn't react bullishly to support, you can take a little loss on your new long order, yes, and still ride the already in profit shares. And that's perfect. So number 5 is correct. It's edge with good explanation. So do we have, how many people are taking this test? 1, 2, 3, 4, 5, 6. So do we have any other person as? No. No. So only 6 people took this test. But then I noticed that there are beginners also in the group who would have loved to take the test, but then the questions were a bit tedious for them. So after this giveaway of $1,000, which is 200 to 5 people, I will be organizing another giveaway for strictly beginners who have been trading, at least, who know how to, if they see chart, they know this is chart, they know what they are doing, they know what they want to do. So I will organize another giveaway for them. Maybe that will be 500. Then I will see what questions I can set for them, and anybody who passes it will also get their own bonus. So I think that is all the people that have messaged me privately. So Liz Satoshi, Great Man, Sax, Dewumi, Famo. Yeah, that's about it. So now, who has the highest 5 points here? This is 1, 2, 3. So Doctor has 3 points. That's 3 correctly answered. Famo 1, 2, 3, 3 correctly answered. This Sax 5 correctly answered. Then Alice, sorry, I mistakenly spelled your name wrong. Alice here, you have 2. Great Man 1, 2, 3, 3.5. Then Satoshi Nakatomo 1, 2, 3, 4, 4 points. Wow, so everybody here had above 2 points. Everybody that attempted it had above 2 points. Maybe I should have made the pass mark to be 3 points. So we have 1, 2, 3, 4, 5, 6. Okay, this is what I'll do. Like I said in the guide, I said the person with the highest will be of priority. So here, Alex will be the one out of the 5 people. But he attempted it and he did quite well. This is the first time I'm seeing him in the group, and at least he did something. So I think for that, he will get something. Even if it's a bit low to others, he will get $100. Why all the other people get 200 ish. All right, guys. So that is it. I have to go to the group now and then tell the people, upload this on YouTube, then let the winner send me their USDT wallet, then I can make the transfer to them. Once the transfer is done, then I may make another video showing you the process of sending the transfers to them. So thank you for being with us, guys.